Good evening and welcome to a brand new show of Markets Tomorrow. I'm Nikunj Dalmia. As always, on Markets Tomorrow, it's all about money-making ideas for tomorrow morning. But before we do that, here's a look at some voices and some faces who would be joining us on this edition of Markets Tomorrow. Nirmal Jain, Chairman of IFL, Madhav Dhar, Managing Partner at GTI Investment, and along with him, we've got Nitin Rakesh, Independent Market Expert. Now, before I bring on board my live market guest, here's a look at the market roundup. On expected lines, things remained extremely choppy and unpredictable on the last day of the August series. Markets started low. Nifty went below 5,050, and just when everyone thought that we were staring at a technical breakdown, we saw a big reversal in fortunes. Nifty recovered more than 1.5% from the day's low and closed almost at the highest point of the day. Banking stocks once again led the charge. Trading volumes were above average. Some high beta stocks, they made a comeback. But whichever way I cut and dissect the market, it simply smells of short covering. 5 days on a trot, markets had appreciated. The trade was getting too much one-sided, or it was getting too crowded. Today was the expiry day, and in the last half an hour of trade, traders either they cut their shorts or they rolled over their shorts. That really did the trick for Indian markets. Nothing more, nothing less. Today's half an hour of market action is no measure of honestly what lies ahead. So what's the best way to trade and make money in this market? For that, let's connect with our experts, Ashwini Gujral and Devin Choksi. Gentlemen, good evening to you. Thank you for joining us. Devin, first a word on market action for the day gone by. We started low. Things were looking slightly choppy and tough for Indian markets in the mid-afternoon session. But last half an hour, Devin, what did the trick for us?
Yeah, Nikunj. Good morning. Good afternoon, sorry. Well, I think what I have seen is that because of the end of the August series contract today and under the low IV, what we have seen in this particular day is having a good amount of short side rollover taking place today. And that's where I think we have basically, seen a good amount of reprieve also in the market when the rollover took place. To my mind, I think there are no fundamental reasons, nor I think any significant participation coming in from any long side investors in this kind of a environment where people are waiting largely for the government to announce some of the policy measures, take some of the actions pertaining to the fuel product price hike, and also I think waiting for the GAR and retro tax reversal. These are some of the key events which are very closely watched out by the people on the domestic side, as well as I think on the international side. I think the key interest of watch would be the Jackson Hole meeting tomorrow, and that's where I think Fed policy would be reviewed. So I think market is watchful at this point of time. Nothing major is happening. Participation is remaining relatively weak, and I think the confidence to take it forward, I think on a sustainable basis, I think is not there in this place. So we'll have to wait and see how the events unfold and see how exactly market takes the course thereafter.
Ashwini Gujral, do you think today's market action smells of only one thing, short covering, and it is no measure of what lies ahead?
No, it's important for me to know what I need to do more than what I think happened. For me, as long as we stay below 5360, we remain on the short side. On the Bank Nifty, as long as we remain below 10,000, 30 to about 10,130 to about 10,150, we remain on the short side. Chances are this is short covering and the downtrend should continue. But if something different happens, I know the points where I would cut my short positions and maybe prepare for even a sideways type of market, because really the global market is not supporting our markets on the downside, and we've often seen when that is the case, you really don't expect our market to go on falling. So either global market starts participating on the downside, or I would be very wary of extending my short positions.
Okay, now let me map how Indian markets have moved in the August series, the series which ended today. It's been a good series, or the August series has been a good series for major averages at least. Nifty appreciated by about 5.5%, Sensex appreciated by about 5.5%. But the minute you look outside the Nifty 50, gains were not there. That to my mind is the real story. To look at Nifty, And to talk about strength, I think is meaningless, because in last 4 or 5 trading sessions, individual stocks have gone through serious amount of price damage. If I divide the month of August into two, first half we saw steady appreciation, but in last 6 days we've seen a bloodbath in mid and small cap stocks. So which is the real market? The market which we saw in the first half of August, or the market we've reported in last 4 or 5 days?
Well, I think in the first part of the August, I think it all started with optimism, some kind of hope that finance minister has made some positive statements, and as a result of which investors and the market participants started to believe that there are certain policy measures which will come up, and it will definitely take care of the overseas inflow of money, I think, which is probably, I think, coming only by way of ETF at this point of time. So long only fund expectations were there, I think, once the retro tax and GAR related provisions are reversed. I think in the second half of the August, as I would like to summarize, I think largely was dominated by the issues pertaining to the Colgate related report coming in from the CAG side, and the thereafter ruckus happening into the parliament. So from, I think, a perspective of an investor or a trader, I think the second half has been a disastrous. You have probably seen, I think, a larger amount of damage happening in most of the sectors, including in the areas of, I think, companies which are holding the insurance businesses, companies which are in the banking space, companies which are into the metal space, and the, I think, mining space also. I think the companies have got significantly hammered down. I would think that market definitely wants a lot of clarity on the policy front. Market definitely wants, I think, a lot of clarity coming up from the government on action front on the infrastructure side. If they don't end up giving one, probably, I think, the market will not recover so easily. At the same time, due to, I think, the dominance of the ETFs in the market, the downside in the market would be less because the IVs are remaining low on the options. So to that extent, I think there would be a reprieve, as I would call it. I would think that the market would stay in the range of 50-200, 50-50 on the downside, and probably 5350, 5400 on the upside. And in this range, I think it will travel. To cross it above, you certainly require, I think, some major boosters coming into the market on a positive side. Unless they happen, I don't think that the market would easily go out of this range.
Ashwini, two stocks, two outperformers, I would say, TCS and then HUL. And what a lovely coincidence. In the August series, both of them have appreciated by 14%.
Well, yes, the only problem here is that HUL may have done too much in the August series and now may need to move sideways, because it went from 465 to about 525. That's not a very usual occurrence for something like HUL, but strange things happened. Reliance went up 15%, HUL went up 15%. So I would much rather now wait for consolidation, maybe a dip to about 490, 495 before I enter HUL again. TCS, on the other hand, has broken out of 1290, 1300. It's holding on to that. As long as it stays above that, on declines, TCS is a buy. It has a clear stop about 1290, and we should see levels of 1500 coming in a few months to come.
Now, before I take a break, let me just address Tech Mahindra. Tech Mahindra saw a block deal today, and we understand that BT, which is British Telecom, they have reduced their stake in Tech Mahindra quite significantly. Deven, BT has been a long-term investor in Tech Mahindra. If a long-term investor is cashing out, it's never a good sign or a signal.
Well, yes, I think generally we would tend to think that way, but I think the Tech Mahindra and Mahindra Satyam merger could be one of the reasons for which I think the BT opting out of Tech Mahindra. That could be one of the reasons, as I would maintain. I do agree that there is nothing wrong fundamentally with Mahindra Satyam either at this point of time, having seen the kind of little better look onto the business model in recent days after Mahindra has taken over. Probably I would think that the reason for BT getting out of the stock could be their own individual in the kind of uncertainties that we are seeing. Plus, on the other side, if you look at, I think, the overall IT space, there is a significant amount of shift happening onto the business model itself. The typical time and value services model, I think, which we have been operating in the IT space, is now basically going out, and probably I think more and more companies are focusing, increasing on the consulting space and the product space. unless and until I think the companies move into this space, I think the businesses are not going to grow as much as they have grown in the past. One of the reasons could be that some player like BT getting out of it, could be that I think the company needed to look into the consulting and to the product space. I think which probably I think should be the factor to watch in the most of the IT companies going forward from now.
Alright gentlemen, stay with us. Let's take a break. When we come back, we will look at two important macro cues. First, expectations from the Jackson Hole meeting, and then GDP. Tomorrow Q1 GDP numbers are out. What are the expectations? More on that when we come back.